don't sell your Bitcoin right here, right now, because Bitcoin is your portfolio insurance and you got to focus on the other part of your portfolio. All paths lead to Bitcoin. All paths. You talk about Jeff Goose, deflationary path, it leads to Bitcoin. You talk about QE Infinity and stealth QE Infinity and this BTFP, which, by the way, BTFP, backstop the fiat Ponzi. Okay, that's what this funding program is that the Fed has started. Backstop the fiat Ponzi because, very simple, mathematics, debasement is 100% certain. I've never seen a simpler trade in my whole life, and I call it a trade even though it's an investment.
Greg Foss is a credit analyst and portfolio manager who has publicly spoken about the risks of credit default swaps, CDs, and their role in the financial crisis. CDs are financial contracts used as a form of insurance to hedge against the risk of default on a particular debt instrument. Foss argues that CDs, although used to hedge against default, can also be used to speculate on the failure of companies or countries. He believes the use of CDs contributed to the financial crisis by allowing investors to bet against the housing market and take on excessive risk without fully understanding the potential consequences. Foss also suggests that tighter regulations and greater transparency in the CDs market are needed to prevent another financial crisis. Foss recommends Bitcoin as an alternative to traditional financial instruments like CDs. He believes that Bitcoin's decentralized nature and limited supply make it a more secure and stable investment option. Additionally, Bitcoin has no counterparty risk, meaning investors do not have to worry about a financial institution or government defaulting on their investments. Foss has become a vocal advocate for Bitcoin, often speaking at conferences and on podcasts about its benefits as an investment option for those looking to protect their wealth and hedge against systemic risks in the financial markets. In a recent interview on the John Vallis Bitcoin Rapid Fire YouTube channel, Foss shared more insights into why he recommends everyone to get as much Bitcoin as possible.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
And so I have this thesis on credit default swaps, and you can actually value Bitcoin because everyone says Bitcoin has no intrinsic value, blah, 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 blah. Well, go full circle. And Mike Novogratz, who we love him or hate him, the man is a big man in finance, tweets out today, Bitcoin is a credit default swap on sovereign debt. Think about it. And I've been inundated. Novo, Greg Foss has been saying this for years. Novo tweets this thing out. And I'm like, well, okay, my thesis is getting around because I can calculate the value of Bitcoin using credit default swaps on the United States and show you that Bitcoin should be trading at over $200,000 today on USA debt alone based on insurance prices for that debt. I honestly believe more than ever, the banking crisis that we are going through right now will be reflected in sovereign debt credit spreads, and the value of Bitcoin intrinsically goes up as bank stocks go down, and I can show you the exact correlation using credit default swaps. Hey, you don't have to buy the thesis, but don't listen to Charlie Munger and don't listen to Steve Hanke, who says it has no intrinsic value. They are wrong, and they are going to expire. They're past their best before date. They'll expire. They shouldn't buy green bananas, right? You know the story. Money wasn't ever actually, or barter actually never existed. What happened in tribes is, and this is according to Cesar, is that let's say the tribe went out and killed a buffalo and people needed buffalo meat. The hunter would decide, okay, I owe money I owe food to this person because they gave me some chickens at one point. And what money was a ledger of your debts that you owed to other hunters in the tribe over time if you had taken something from them. And then that ledger made sense because it could have been seashells, it could have been rocks, it could have been, in the case of North American Indians, wampum, or it eventually went to gold as being this ledger. So I see what you're saying, Jeff. It makes a lot of sense from that side as well. I guess I'll just firmly plant myself right in the middle here and say it's not happening quickly because the other system is just so big and so ingrained that you can't change it overnight. And by the way, I don't want to change it overnight. And I don't think Jeff does either. We've talked about this network transfer where it's not like a light switch. You turn one off and you turn one on. The network grows in parallel. And I think we're seeing that happen right now. The people that are coming into this Bitcoin community are blowing my mind. I finished reading Jason Lowry's book, Software, which is 400 pages of absolute intense, in my opinion, brilliance. Other people might think it's intense drivel, but please read it because I am blown away by the intelligence of this young man. It's a little repetitive, but everyone says Foss is repetitive too, because we repeat ourselves because people don't listen. So you have to say the same thing 6 ways. The price actually starts being correlated to increased risk means increased price of Bitcoin, meaning a long volatility asset again. So sorry to jump in front of you, Jeff, but John said a word, suboptimal. And every time I hear that word, it makes me think of that doorknob, Jim Cramer, right? So do you guys watch Jim Cramer? Because he uses that word all the time. Suboptimal.
How dare you, Jeff? How dare you compare me to Jim Cramer?
No, me. Sorry, that was Foss. So look, I'm losing battery here, but here's the key thing. I'm down to my last 5% of battery power on my iPad here. So if I lose you guys, it's only because I want to leave you with this. Jim Cramer's a moron. Okay, he is absolutely.
I think we can all agree on that one.
Yeah, he's the law. So suboptimal. You reminded me of him. Don't sell your Bitcoin right here, right now, because Bitcoin is your portfolio insurance, and you got to focus on the other part of your portfolio. All paths lead to Bitcoin. All paths. You talk about Jeff Booth's deflationary path, it leads to Bitcoin. You talk about QE Infinity and stealth QE Infinity and this BTFP, which, by the way, BTFP, backstop the fiat Ponzi. Okay, that's what this funding program is that the Fed has started. Backstop the fiat Ponzi because, very simple, mathematics, debasement is 100% certain. I've never seen a simpler trade in my whole life, and I call it a trade even though it's an investment. Fiat debasement is 100% certain in all scenarios. That's advantageous to people who are uncertain how they should approach that because there's no doubt. It's 100% certain. Yeah. You know, it's really an asymmetric investment, but you got to trade something to get into it. You're trading fiat to get into it, and then you keep it for as long as your thesis is in line. But it's an investment, 100%, 20-year investment. But here's the coolest thing. You know that fiat debasement is 100% certain, and the gold bugs have known this for a long time, but they're holding a inferior hard asset. But don't sell your gold to buy Bitcoin. Don't sell real estate necessarily to buy Bitcoin. Sell your bonds. Hey, Preston, your bonds. Those are fiat contracts. Those are programmed to debase. Sell your bonds to buy Bitcoin. That's the simplest trade I've ever seen. And 3 years ago, when I wrote my paper to get me to become really good friends with you guys, I think I'm a friend. Jeff actually, you've saved a few of my shekels here and there, and more importantly, some life choices. So I'll just say this. 3 years ago, I saw this coming. I've been ambulance chasing on the bond market since then. Bonds have probably reached a historical fair value level if fiat debasement wasn't 100% certain. But fiat debasement's 100% certain, and bonds are a fiat contract. So you still shouldn't own bonds for the long term. You can pretend you can trade them, but picking up nickels in front of a steamroller is never a wise investment or trading advice. So all of these paths lead to
Bitcoin is suggested by Greg Foss as a means to protect against credit default swaps, CDs, due to its decentralized nature. CDs are complex financial instruments that are often traded in unregulated markets, making it difficult to understand the associated risks. In contrast, Bitcoin operates on a decentralized blockchain network, which provides transparency and accountability in financial transactions. By using Bitcoin as a store of value and means of payment, individuals and institutions can potentially reduce their reliance on traditional financial systems and the associated risks. Bitcoin's limited supply and decentralized nature make it resistant to inflation and manipulation by central authorities, thereby providing a hedge against potential economic downturns and financial crisis. Overall, Bitcoin presents a potentially powerful tool for protecting against the risks associated with complex financial instruments like CDs. For more daily dose crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.